What's good, everybody? Welcome to Froggy Stonks. Nothing I say is financial advice, entertainment purposes only. Not a financial advisor. I want to talk to everybody about the AMC options chain. Back my mic over. Literally, we've been talking about no options May since the second or third week of April. Yesterday, Astro comes out in a post and says, buying AMC calls. I immediately retweeted it and commented, this is a terrible idea. After he posted that, and I'm not saying he influenced this to happen, but after he posted that, I'm on the wrong. The AMC calls for this Friday went through the roof on the $16 strike price. We went from probably 5 to 8K on the open interest for the $16 strike for May 6th on last Friday to 10,800 by Monday. And then Tuesday, yesterday, I got on and said, this is a problem. They're going to blow the call options out again. This is a terrible idea. Buy raw stock. Astro tweets, buying call options. Almost immediately, a few hours after that, the open interest went from 10,800 to 28.7 thousand on the open interest for the $16 May 6th strike price. Not even within minutes of that happening, we had a run. 16.11. The calls on the $16 strike, people flooding into those calls, created a ceiling that the market makers set because they wanted the price to go up 5 to 6%. They let it run up. They open a new short, and then they take away all the bait that they put in on the call options chain, right? The 8,000, 10,000 calls that they put in, they took that away. They closed their positions. They shorted it back down. We hit 16. We got a new ceiling. We fell back below 1550. Everybody's calls immediately went out of the money. And now, a day later, Wednesday, 2 more days until Friday, we're sitting again at $14.92. So not even the $15 calls made it in the money, or they're not going to. And that's what I said probably Friday is don't worry about max pain, which is like $16.50 or something right now. Look at the call options chain and look if there's any strike prices with at least 3,500 open interest on them. Market makers are going to try to blow below that. And that's where we're sitting right now, $14.92. I don't think we're going to take $15 on Friday. If we do, I'll be very surprised. The only other option is if a whale comes in on Friday and purchases a ton of shares, and yes, then that could cause the calls to land in the option. But the problem is A, you're still engaging in payment for order flow, and B, if you hold raw stock, you're going to make those gains anyways. Telling you guys, man, friggin' options chain, it's so predictable. You have the $15 strike price has 3,644 on the open interest. So market makers are going to push it below 15 to eat all that up because it's worth it to them. Anything below, say, like 2,000 isn't really worth it to them. So they're going to steal all these premiums. 3,600, 3,200, 10.6K, 4,000, 8,000, 5,000, 6,000. There's 4,500 at $30 for a May 6th on open interest for a strike price. I can't tell you how simple this is, you guys. They are manipulating the stock through the options chain. They're bleeding us dry. They are bleeding the movement dry because people are influencing and pushing to buy these calls or sell covered calls. If you sell a covered call, you're hoping the stock goes down. If you buy a put to hedge your own position, market makers are going to eat you alive. That's what they do for a living. You're not going to fool them. If you buy calls, you're going to get your premium stolen. They have all the power in the options chain. We have none. That's the casino, is the options chain. If you buy and hold, you have all the power because they can't take your shares. They can't make you sell your shares. That's where all the money from the stock is going. It's being bled out through the options chain. Since $72 and everybody started playing puts and covered calls, it's been slowly feeding liquidity to people that are not in the movement, stealing money out from the market. That's why we're down. Market makers have been doing it since $72. Hell, if anything, they let it run to 72 purposely so they could play the downside. They held their short positions. It ran to 72. Massive failure to delivers. Then they reshorted at 72 and played options on the way down to clear their bad shorts that they opened up at, say, like $24, or the shorts they had at $2. It's freaking simple, guys. Anyways, I just wanted to make a quick video and show you exactly what I'm talking about. It's like clockwork. So good luck to you the rest of the week. Hope you guys make some money. I got my Top Gun freaking advance tickets for my pin, my print, and my NFT. I got my Doctor Strange tickets. I'm going this weekend. Super excited. You guys, go to the movies. Go to GameStop. Buy the product. You're the consumer investor. We control the float, and you control the vote. Make sure that whatever you're doing, if you're fighting for free and fair markets, start contacting senators and incumbents and congressmen and challengers and see who's fighting for free and fair markets, man. It's very important. Midterms coming up. We have an opportunity to push a lot of bad people out of Congress that have been doing a lot of insider trading on the back of massive Wall Street crackdowns like the arrest of Bill Wang, which I'm assuming he's getting ready to sing like a freaking canary on the rest of the street. So you guys have a good week, man. Froggy Stonks out.